Hey, Wealth Creation with Options traders, Matt Buckley, the Chief Investment Strategist here at WCI with our weekly debrief of our positions and what's going on in the market. What's going on in the market is absolute stupidity, to put it bluntly. It's a rally. It's a short squeeze, essentially. We talked about on Wednesday how Angela Merkel on Monday threw cold water all over this summit, this two-day EU summit, Thursday, Friday, and that she was holding her ground on Greece and Italy and Spain and debt issues, quack, quack, quack. Well, apparently they solved all the world's problems. Sold. Unbelievably sold. Selling into this rally like you read about in Selling Into This Rally magazine. This is a short squeeze, folks. They essentially came up with an idea, something that hasn't been created, a vehicle that hasn't been created to do instruments. It's when you read the details of what they're talking about, good luck. It is not going to happen. There's a great article in the journal the other day that about the whole debt crisis in Europe and how the math physically cannot work out. It will not work out because of the borrowing costs. In Italy and Spain, we're bumping up around the 7% range. Their bonds. I recommend you. I had it right here and I forgot where it went. It's under my trading notes, but I recommend you search for it on the Wall Street Journal online. I am selling into this now. On days like today, it's also a short squeeze. What's that mean? People were short this meeting. They were just, hey, nothing's going to come out of this meeting, and all of a sudden, this mysterious, hey, there's some good news comes out of this meeting, and the world's a happy place. It is not. I'd use this opportunity to get long as hell on volatility, because what's the VIX doing today? It's got to be down. Look at that, 10% down on the VIX. And again, let's look at this. Let's put this into focus here with the VIX being down here at these levels, down 10% on the day here. As we've talked about, the tri-delt, delta, delta, delta. Look how low volatility is right now. It's just absolutely unbelievable. I would be getting as long as heck on volatility. Speaking about that, what I did on Thursday morning was I bought back the that 23 call with our VXX position. We're still long the Jan 14 15s, which are in danger now. These were deep in the money calls, weren't they? Now they're not. And I rolled it down to the 19s. I sold the 19s for a credit of $4.07. Let's look at this. Let's look at VXX. This is nuts. But I'm glad this is a diagonal we have on, because let's take a look at that, down 5% today. So let's go back to our paper trading account. Let's look at our positions. VXX, our diagonal. Look at this. So right now the current position we have in our model portfolio is the 15-19. So we are long the Jan 14 15 calls, and we sold the 19s, and we're already making a healthy profit today on the 19 calls. Look at this. I mean, they're already up 57%. We've already captured, $261. Still have another, potentially $200 to capture here. I might even look at rolling these things down again. I mean, this is just nuts, seeing the VXX down here at these levels. Other trade that's looking good in our model portfolio is what? Gold. We're looking great. One more time on gold. Our gold position's looking great. Gold's rallying today on this news, up about nearly $4. So stay the course on our GLD trade, and that iron condor. It's looking great. Let's just analyze it real quick. See what's going on. Any other outliers, or this thing's going right down the fairway here. Actually, our percentage increased to 40%. It was about, what, 30-ish? Now it's increased to about 41% of capturing this full $2,100 there. SDS is obviously going to be in the red today. Being, we sold this bull put spread, the 16-14 out to Dees. But, the SDS is going to be down today a little bit, obviously, but not for long, folks. I'm a seller of this rally. I think this rally is going to fade today. I think, let's take a look at the SPX. Again, it's a short squeeze, and like we talked about on Wednesday, no institutional firms like being long going in to the weekend. So it'll be interesting to see what happens here. Let's just take a look at a quick 2-hour chart of the SPX and see how it's channeling here. So obviously we had a big gap up today at the open on this ridiculous Euro news, and then let me go. I never look at a minute. It's too ADD. I look at a 3-minute chart here. So gap up and then sideways. A little bit of a further move up, but I think this is going to run out of steam. I think once people cover their shorts, so to speak, we're gonna see this rally fade. If anything, next week again, my strategic mindset on everything hasn't changed. If anything, it's only gotten stronger. The solution in the Eurozone is a fake, and it's not going to happen, and I'm a seller of it. So everything else is going well in the model portfolio there. So we got our VXX trade on. We rolled down SDS long term, $5,000 for us, and then our GLD Iron Condors looking perfect. So we're looking at about $2,900 in so far in gains over the past 4 weeks, which beats a stick in the eye, and that's about 19% return on the capital that we're deploying. So hope everybody's having a great day. Again, I take, you can see my total model portfolio is taking it in the teeth today because of Nike earnings and also RIM earnings, but I really don't care because Nike is a July expiration and RIM is a long-term buyout play. If anything, RIM's poor earnings today, I would be adding to these calls, and I might buy more of these calls as a matter of fact, because now it's at an even cheaper price. You know, I bought these calls around $10. Now they're around $7.50. Now it's cheaper for a Facebook or somebody to acquire. So this is actually, bad earnings might be good news for that RIM call position we talked about. Okay, so I got to go, got to get trading, and I will talk to you guys next week. Have a great weekend.